Hello everyone, welcome to the daily market updates video wherein I share my insights, my knowledge and my learnings from today and my outlook for the future. So without further ado, let's get started. So today's theme was basically a consolidation. We entered into the range bound markets again, and today finally we had an inside day. So there is a lot of indecision in the markets and there is a lot of consolidation within the range. So let me show you all of these in the charts, starting with the weekly time frame. So in the weekly charts, there is not much, different than yesterday, but just wanted to highlight this, that we are still, holding the support of 5-day moving average. So let me show you. In the last week over here, you can see we perfectly got rejected from the top of the Bollinger Band. And over here, we are, taking a support at 5-day moving average. So it is the second day of the week and we still have a lot of days to go. But as of now, we are holding the 5-day moving average. Now, why is the 5-day EMA so important? It is basically a short symbol of shortest term sentiment. So for any stock to go lower, first and foremost, it has to go lower than the 5-day moving average. Only then we can conclude that the short-term sentiment is bearish. So right now everything is consolidating. Right now we are not breaking down the 5-day EMA on the weekly time frame. So this is the status on the weekly time frame. Not a lot of things has changed, but the only notable key learning is we are still holding the 5 EMA. So that's my take on weekly time frame. And now let us jump on the daily time frame. So on the daily time frame, I wanted to discuss two important things. We entered the chop zone again, and we are still holding the median line of the Bollinger Band. So let me show you exactly what I mean over here. So this is the daily chart and I have highlighted this chop zone for you guys. Just to show that we have done nothing since almost 15th November. So as you can see over here, we are just consolidating or chopping sideways. So this is the chop zone that I was talking about. Now, why I highlighted this is because it is important for us to determine the state of the market. Many a times market expands and goes out of the range. Many a times it digests the gains and then give us a breakout. So right now I just wanted to share that we are in the consolidation zone, that is the sideways zone. Some call it chop zone, whatever you may name it, but right now we are just consolidating. So we are not breaking out on the upside, we are not breaking down on the downside. So this is exactly what is happening. Now ideally you will ask, like, why are we doing this? So there is always a fundamental reason why market is acting the way it is. So my thesis is very simple. The reason why market is not breaking down and going sideways is because of two reasons. We had a Joel's data, economic data released today, and it seems to be slowing down. So the markets took that as a positive. And also, more important than that, I wanted to show you two important things. One is the Federal Reserve chairman is going to decide on interest rates next week, that is the second week of December. And also, we will be getting the CPI, that is Consumer Price Inflation data numbers, next week as well. And why am I mentioning these two important things? It is because that data release is going to determine the next phase of the markets. So let me explain you in a very short amount of time. So when the inflation comes cooler, or when the inflation goes down, Federal Reserve has very less impetus to raise the rates. So let's say if inflation comes below 3%, then Fed will not raise the rates. And if Fed doesn't raise the rates, if it keeps the rate as it is, and then the markets are going to take that information as a positive event. So that is why we need to be very cautious about these fundamental data releases. So let me show you exactly how do I get this information and how do I keep a track of this information. So if I go to my Chrome, you can also get all of these data by yourself. So I have two things over here. One is the schedule of the CPI data release, that is this one. So as you can see, I have highlighted over here, December 12 is going to be the day where the consumer price inflation data is going to get released. And more importantly, the Federal Reserve Chairman, that is the FOMC meeting, the meeting in which the central bankers decide how much is going to be the rate, is this one, that is 12th and 13th. So on the 13th, they are going to tell us that if they are going to keep the interest rates the same. And our job as a market participant or as a trader is to know like what is the maximum probability of happening. So that also you can check from a CME Fed Watch tool. So over here you can see I have a a CME Fed Watch tool over here, and you can see over here the next FOMC meeting is after 7 days. And over here you can see that for the December 13th meeting, there is a 99.9% chances that they will keep the rates the same. So over here you can see 525 and 550. That is basically 525 basis points. That means 5.25 percentage. So they are almost at this point it is very, very clear that they are going to keep the interest rate same. Now, the only caveat to this discussion is if the inflation data comes in hotter than expected. So let me show you the inflation data as well. So over here, I have this US inflation year over year, and I will show you the exact graph. So over here you can see it is at 3.2 right now. So if it comes in lower than 3.2 or in the range of 3.4 or 3.5, that means the inflation is cooling down. So that will be very, very positive for markets. So we'll wait and see what happens, but I just wanted to show you that using these trading view and using these official government websites, you can also track all of these information, so to get a good gist of what to expect and what is happening right now. So this is the a fundamental thesis or the theme going forward for next 2 weeks. And to my understanding, we are into a seasonally really good period. So the chances are very, very high that we will not have a major correction or a major pullback. Yes, we may go down by, let's say, 5 to 7%, which is perfectly normal after given a such a blastering rally. But this is where the markets are standing right now, and that's what I wanted to show. So going forward on the daily chart, we still have the first line of defense, that is this 26-day EMA, and if it gets tested, then the ultimate area of support is going to be this 50-day EMA. So EMA meaning exponential moving average. So that's my take on the daily charts. I wanted to show you not only the technical analysis, but also the fundamental side of markets, so that you have the idea of what to expect and why the things are happening the way they are happening. So with that, I would like to conclude the daily analysis section. Now let's jump on to the intraday time frame and let's analyze what could we have done for the day trading. So for the intraday, I was going to have a very nice strategy, and that was if the markets continue the pullback and if it tests the 26-day EMA, then I will go long. But instead, we actually got an inside day. We neither took out the previous day's high and we neither took out the previous day's low. So let me tell you what do I mean. So this is the intraday chart. The first thing when I go to the trading session is I see that is there any major news in the start of the session. So as you can see over here, the December 5, that is today's session, we had 7 o'clock was the time where all the major news was going to get released. So my game plan going into today's session was I will only trade after 7 o'clock. After the market has digested all the news, and after 1 hour, I will see if I get any trading signals or if I see any support, then only I will trade. So that's exactly what I did. I waited for the 7 o'clock news to happen. So my 7 o'clock is basically Eastern times 10 o'clock. So I waited. So you can see over here when the market the regular session started, it had a very nice rally, and on the 7 o'clock news it had a 71 point candle. So it was like going bonkers. It was going way too high. So I was just waiting till 7:30, like to know what is going on and how can I benefit from it. So as you can see over here, after 7:30, I was looking for, trading signals and, my system to give me the opportunity. So I did not had the opportunity, at least until 8:20. So at 8:20, you can see there were two big red candles and I was just waiting for the downside to confirm. So in my system, the downside is confirmed by having a bearish crossover between the 5-day and the 26-day. The 5-day over here EMA is the blue line and the red line that you see over here is the 26-day EMA. So I finally got a crossover over here on 8:50. But the problem was we already had a really good, downturn. Like you can see 30 points candle, 50 points candle, and this candle was 62 points. And it exactly bounced from the 150 and 200-day EMA. So I was just waiting as to what will happen. Why? Because then all the news were over. And since all the news are over and since it is bouncing from 200-day, I just kept on waiting because my gut feeling was if there is no more news and if we are not testing the big moving average on the daily time frame. So you can see over here we actually broke down below the median line of Bollinger Band, but we were unsuccessful in testing the red line, that is the 26-day EMA. So my gut feeling was we might get an inside day. So I was, looking for a long opportunity in the entire session. So as you can see, I took the first trade on 9:15 and 9:15 Pacific time is basically over here. But the problem was it did not give me the confirmation and the market still went down. But the good part is it took the support at 200 EMA. So I was just waiting like what is happening at 200 EMA. If it bounced back, then I can be really sure that the price action will chop around and will do nothing. So that's exactly what happened. So I took a couple of long trades, but that only after the second half of the session. So on this chop zone. So that was the only opportunity I could find because it neither went to any big pivot levels. The very nice part about the correlation of QQQ was it perfectly validated the R1 level. So let me show you what I mean. So if you go to the QQQ chart over here, so as you can see in the morning, it perfectly validated the R1 level on the QQQ. So I was just waiting as to what happened, what happens at these levels. So it perfectly got rejected. And for the people who wanted to take 5 to 10 points would be a very easy trade. I just happened to be very, very patient. So I just wanted to wait and see what's going on. The moment QQQ lost R1, that was the moment where they just, rolled down. So that was one of the indications. Also, if you look at the VIX, it was constantly chopping. So as you can see over here, high, lower high, lower high, again lower high, again lower high. So the trend was pretty down. So if the volatility was constantly going down and the markets were constantly chopping around on the sideways pattern, that was a perfect recipe for long trades. So that's exactly what I did. But that was in the second half of the session. So this was my learning from the intraday time frame. So I think it was pretty hard session, I would say. Why? Because I got the quality trades after the first half of the session. So normally I try to avoid the second half of the session. The reason being this: you can have a lot of chop zones. So that's some days are very tricky. So that's why those days we need to be patient. So this was the perfect day to be patient and to conclude. I would say that when you have zero news in the second half of the session, and when you have an inside day wherein you are not able to break over here the previous day's low and also the previous day's high, then always expect a choppy day. One more important development that is happening right now that I wanted to share is the anchored VWAP. So over here, you can see this white line developing. So this is the anchored VWAP. It refreshes every start of the month. So right now, as of now, this anchored VWAP tend to be a very big resistance on the intraday as well. So if you see over here 15907 and over here 15907, it acted as a resistance a lot of times. So over here, over here, over here. So just keep a close eye on that anchored VWAP as well. So that's my take on intraday time frame. And I think these are the learnings, these kind of days wherein you develop as a trader. So yeah, this is my take on intraday time frame. So in the end, I would like to thank you for viewing and thank you for your time. And as I always say, keep learning, keep growing, keep trading, and develop a lot of patience, because we are paid for the patience, not for doing anything. So it's a very subtle insight, but if you understand this, then that would be a game changer. So at last, thank you, and like, share, and subscribe, and do all those good stuff. Thanks so much.